$344 billion, 0 cents in cash, just sitting there while the world waits for the next CPI print. Most people think that's hesitation. I call it preparation. When everyone else trades headlines, real investors wait for filters, the rules that tell you when the odds finally tilt your way. In the next few minutes, I'll show you Buffett's 4 filters, the checklist he runs before moving $1 of that $344 billion, 0 cents. You'll learn why the biggest advantage in investing isn't money. It's patience, judgment, and the discipline to act only when the math and the story line up. The CPI report is coming. Markets expect fireworks. But record cash at Berkshire isn't a pause. It's dry powder. Buffett's team studies prices like a sniper studies wind speed. They'll wait years to pull the trigger because volatility isn't risk. It's inventory. Cash is a call option without an expiration date. While others panic for liquidity, Buffett holds optionality. When assets get mispriced, he doesn't scramble for loans or approvals. He just moves. Speed in markets is bought long before the crash. Buffett doesn't swing at every pitch. He waits for a fat one. CPI volatility will make prices dance. But a dancing market doesn't mean a cheap market. Price is what you pay. Value is what you get. Until those two overlap, the bat stays on his shoulder. Cash protects your clarity. When everyone's fearful, liquidity keeps you sane. It lets you think like an owner, not a gambler. Because psychology, not strategy, decides who survives a drawdown. Start with a watch list of businesses you understand. Mark your buy zones before emotion hits. Keep a cash sleeve for high conviction opportunities. Scale in gradually, never all at once. This is investing, not prediction. True, holding cash hurts when prices rise. But Buffett treats that cost as an insurance premium. He's buying flexibility. When assets fall 30%, he can buy them with a 10% inflation tax instead of a 30% capital loss. Remember March 2020, markets froze, funds begged for liquidity. Buffett could have written checks overnight. He didn't need the Fed. That's the hidden power of cash. It buys time and silence when the world screams for help. Entries only when value exceeds price by a clear margin. Sizing, bet small until conviction meets valuation. Exits, when price outruns value, not when the crowd cheers. Discipline is the difference between compounding and confusion. Buffett's filters aren't magic. They're human guardrails against greed and fear. They keep emotion from turning patience into paralysis. 4 filters. 1 principle, clarity before action. If this helped you see the calm beneath the chaos, share it and build your own checklist before the CPI dust settles. Because wealth isn't built in rallies. It's built in restraint.